Now, Jeff, it's time to bring in our final guest of the day, and that's income specialist Matthew Johnson, president of Johnson Wealth and Income Management, a retirement income store located in the great state of Iowa. Matthew, thanks so much for being back with us here on the show.
It's my pleasure. Thanks so much.
So Matthew Johnson, all the way from Iowa. You know, there's a new digital currency. It's called digital corn. Did you hear about that?
Coinbase.
Sounds like I'm going to have to go ahead and get a new combine.
No, seriously though, the crypto craze is in full effect. Are your clients inquiring about cryptocurrencies and putting some of their money in them in retirement?
Absolutely. There's a lot of curiosity. There's a lot of questions that I'm fielding every single week with regards to cryptocurrency. Yeah.
So as a fellow advisor though, Matthew, how do you see the shift into digital currency impacting your job with your clients, if at all? Do you think it's relevant?
Well, I think it's very relevant. It kind of takes me back to the days when the internet first came into existence. And I remember my dad saying, well, just be careful. This is probably a fad. It's going to go away, right? Cryptocurrency, when we really kind of get into the roots of it, cryptocurrency is so wonderful because it allows so many other individuals from other undeveloped countries to actually have a currency, to be able to have the ability of buying things and that sort of thing. And the technology has really grown. It's very much adapted, and it's gotten so much better, and people are starting to get interested into it. So I do think that it's here to stay. It's something that we're going to have to, be very careful to advise clients on. And it's going to be something that is a part of our everyday life. I'm certain of that.
Well, cryptocurrency, people confuse that with blockchain. I think blockchain is here to stay. Cryptocurrency, MJ, China just put the lockdown on mining any more cryptocurrencies over there. And, what China gets, what they want, they get. And so now they're talking about more regulation here. So we could be looking at a huge speculative bubble in those cryptocurrencies because lots of wealth has been created. So what do you think is going to happen going forward, even though it's 50% off its peaks?
Well, here's the thing. Like you said, it trades a lot like a commodity. So it's down in 3 months, roughly 45%, right? Well, when people consider what goes on within the oil world, within the precious metals world, cryptocurrency is something that you can use in your life as something that you can buy on the low and you can sell on the high. The average time chain or time frame of holding cryptocurrency is like 58 days. It's a very short-term cyclical type of investment. And it's something that I think you could deposit some money into. You can hold it, but certainly don't rely upon it for a steady growth. When we turn back the clock to the turn of the century, when the stock market lost 50%, it took 3 years to do that. Cryptocurrency just did that in 3 months. So it's something that you definitely don't want to be investing your long-term life savings into. It's not a good bet in that regard.
How about some of the articles? We've both read CFA-based articles that say, hey, it's the new digital gold, that just like gold, putting maybe 3% of it into a stock portfolio, a growth-oriented portfolio, can actually be a bit of a hedge, can actually lower your overall volatility risk. For the more aggressive investor who hasn't transitioned to income yet, that's still growth-oriented, is there a place for it there?
Well, of course, I think that it could most definitely have a place in a person's portfolio. We're just going to need to make certain we're only investing the money we can afford to lose, because it is a very speculative thing. It's also very volatile. The other thing to keep in mind is the fact that even though cryptocurrency is developing, and yes, there is these things that they would call a pseudo crypto dividend, that's very much different from the dividend dollar you're going to get paid from a stock, or say the interest that you're going to get paid by the bond. And the reason being is that we're still really limited as to what we can buy with cryptocurrency as a good or a service, where if you get paid $1 of a dividend, that's going to be accepted anywhere for anything you want to buy.
Yeah. Matthew, as usual, all great points. Thanks again for being with us here on The Income Generation.
It's my pleasure.